Okay, the economist argument makes which of the following assumptions? An assumption question. Bank depositors are all financially protected again because the government insures all bank deposits. So everyone's protected. That's great. I'm protected irrespective of the amount. An economist argues that this insurance is partly responsible for the high rates of banking failures. Okay, it's this government protection, government failure. Since it removes any financial incentive to figure out whether the bank that holds is secure. Okay, so no research has to be done. Depositors know some banks will need to be secure in order to compete for depositors. So no research, no competition. So no research, no competition between the banks. Bank failure. So my premise is no research. My intermediate is premise, no research by customers. IC is no competition because no research, no competition between the banks. Final conclusion is bank failure. Government. Government protection. So anyways, so assumptions. Bank failure caused, I don't care how they're caused, I need something which is an assumption for this. Because of government protection, there's no competition, and thus bank failure is because of the government protection. Significant deposit maintain accounts at several, well, if it's several different banks. Go against what the author is saying in a way. Because if it's in several different banks, then you're actually concerned about bank failure. A significant proportion. The more a depositor has a deposit, the more careful he or she tends to be selecting a bank. The more a depositor has to deposit, the more. Maybe C, the difference in interest rate is not a significant bank failures. I think it's D because it's taking away an alternative. Potential depositors are able to determine which banks are secure. Oh, okay, it's E, has to be. So you can do the market research. I think this is more direct. I don't know why D, but I think between D and E, I would go with E. It's just more direct, but it has to do with what's in here. So this is my reason. It's because the government protection, there's no research by customers, there's less competition in between the banks, hence the bank failure because of protection. If more selective, the banks will need to, in fact, the banks would need to be secure in order to compete for depositors. So between D and E, in order for this, government failure, no competition between the banks, final conclusion, bank failure.